A major shift in one of Wall Street's most watched portfolios is sending ripples through the tech investment world, not because of what was said, but because of what was done quietly, in plain sight. Bill Ackman, the billionaire investor behind Pershing Square, has exited his long-held position in Alphabet and moved decisively into Microsoft. This isn't just a portfolio shuffle. It's a high-conviction bet on Microsoft's AI-driven future at a moment when the market remains skeptical, and it forces a critical question. Is Wall Street still underestimating the hidden value locked inside Microsoft's OpenAI stake and its enterprise moat? The signal came through a standard regulatory filing, Pershing Square's 13F, released Friday, revealing a fresh and significant position in Microsoft stock. The move wasn't speculative. It was funded by the full liquidation of Ackman's Alphabet holdings. He was quick to clarify this wasn't a bearish call on Google. In a post on X, Ackman stated explicitly that the sale of Google was not a bet against the company, which he remains bullish on long-term. Instead, with finite capital to deploy, Microsoft simply presented a more compelling opportunity at current valuations. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The timing of the entry matters. Pershing Square began accumulating shares in February, following a substantial sell-off after Microsoft's fiscal Q2 2026 results. At that point, Microsoft was trading at approximately 21 times forward earnings, roughly in line with the broader S&P 500 and well below its historical premium. That valuation gap is central to the Bill Ackman Microsoft thesis. While Microsoft shares have declined 17% year-to-date, underperforming the S&P 500's 10% gain, the sell-off followed real concerns. A disappointing Q3 earnings report raised questions about Azure's growth trajectory, and the company's announcement of $190 billion in capital spending for 2026, up 61% year-over-year and $35 billion above analyst expectations, spooked some investors worried about margins and returns. But Ackman sees past the noise. He argues the market is failing to price in a single, massive asset, Microsoft's 27% ownership in OpenAI. Here's the mechanism. Ackman estimates that stake is worth approximately $200 billion, equivalent to about 7% of Microsoft's total market capitalization. And that value, he contends, is not reflected in the current share price. It's not just a passive investment, it's a strategic anchor in the generative AI race. While some fear that AI-native startups could disrupt legacy software, Ackman dismisses the threat to Microsoft 365. His reasoning? M365 isn't just an office suite. It's deeply embedded in enterprise infrastructure, managing identity, security, compliance, and data governance. That integration creates formidable switching costs. As he put it, unlike point solutions vulnerable to AI disruption, M365 is woven into the daily operations of nearly every large enterprise. The Bill Ackman Microsoft move gains further credibility from external validation. Wedbush analyst Dan Ives echoed the sentiment, arguing that Wall Street continues underestimating Azure's long-term growth potential, especially as enterprises adopt AI at scale. He named Microsoft one of his favorite large-cap tech names to own. From a technical trading perspective, Evercore ISI's Rich Ross noted Microsoft's stock has recently recaptured its 50-day moving average with strength and found support at a long-standing floor, a level that's held since the European debt crisis, suggesting underlying demand. But the real takeaway isn't just the trade, it's the shift in narrative it confirms. The Bill Ackman Microsoft pivot underscores a growing belief that Microsoft's AI advantage isn't just technological, but structural. Its cloud infrastructure, enterprise relationships, and OpenAI partnership form a flywheel that's hard to replicate. Still, uncertainty remains. Azure's growth rate is being closely watched. The $190 billion capital spend must translate into tangible returns. And OpenAI's valuation, while implied by Ackman, isn't independently audited or publicly confirmed. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. So what's the next signal to watch? Not stock price swings, but concrete evidence of AI-driven revenue acceleration in Microsoft's cloud segment, particularly in Azure. If that materializes, Ackman's bet could look prescient. But if growth stalls, the market's skepticism may be justified. For now, the Bill move stands as one of the clearest institutional votes of confidence in Microsoft's AI future, and a stark reminder that sometimes, the most important shifts happen not with a press release, but with a quiet 13F filing.